Hi, I'm Jeff Tucker, Principal Economist at Windermere Real Estate, and these are the numbers to know right now. The first number to know this week, 4%. That is how much higher unemployment claims are than this time last year. We don't actually know the unemployment rate due to the government shutdown, which suspended collection of the household survey it's based on. So instead, economists have turned to state-level data sources. Labor economist Guy Berger shared this chart comparing continuing unemployment claims in 2025 so far in blue to the last 2 years, showing a consistent, gradual 4% year-over-year increase. Now, that's not great news, but it still doesn't indicate a sudden breakdown in economic growth. We'll get a better picture of the economy as the Bureau of Labor Statistics resumes publishing data in the remainder of 2025, now that Congress has voted to end the shutdown. Turning to the housing market, Realtor.com reported almost exactly 1.1 million active listings for sale at the end of October for the third month in a row. One interesting trend this chart makes clear is that since 2020, sellers have been more willing to keep listings up later into the fall than they tended to before the pandemic. That means we are closer now to 2019 inventory levels than at any other time since 2020. But for the fifth month in a row, the pace of growth of inventory from last year has fallen yet again, now down to just 15% year over year. The big growth of active listings this spring and summer helped throw some cold water on price appreciation, decelerating it down near to zero. But that inventory growth has now itself decelerated nationally, such that prices look most likely to flatline next year rather than plunge into negative territory. So speaking of home prices, that brings me to the next number to know, 1.5%. That's the most recent year-over-year change in the Case-Shiller Home Price Index, which makes it the slowest pace of home price appreciation since early 2023. Now, finally, the other puzzle piece for home purchase affordability took a little step in the wrong direction last month. Mortgage rates rebounded from below 6.25% to more like 6.38%, according to Mortgage News Daily. That's still lower than they were last winter or for most of the last year. And it just goes to show that mortgage rates rarely stick to the script and follow a predictable long-term trend. All right, that is all for this month. I look forward to more economic data to share in December, and thanks as always for watching.